Yo, how y'all doing today? How y'all doing today? It's Friday, right? It is Black Friday today. And I'm so thankful to be back on live when it comes to this stock market live weekly show that we have regarding the stock market, all things investing and anything that has to do with money. We tap into it when it comes to the Fridays. Man, I appreciate y'all for continuing to support the programs, continue to support the channel, man. Hit the subscribe button, like button, and share this with someone that needs to hear it. And leave me a comment on all things stock market today. What are y'all invested in? What are y'all investing in? It's Antoine Smalls with Financial Blueprint. We are back today on this Good Friday, on this good Black Friday, right? I hope everybody had a good Thanksgiving. Hope everybody spent some time with their loved ones, their families, had some good food. Today, this morning, I went to the gym because I got to work some of that food off. And it was cool to get out in the morning. But I wanted to start off today before we get into the stock market. I wanted to have this quick discussion about investing. I was talking to a an attorney this morning, and she's older lady, and we were talking about investing in real estate. We was also talking about investing in the stock market. And the one thing that she said to me was that a lot of the older people that was born generation before us did not have the information nor the access to do a lot of the investing that we do now when it comes to millennials and some of the newer generations. And she also notated that um the information wasn't out there for readily available online, obviously when it came to internet, as well as being able to access some of these things. So, what I want to do to start off today is just, encourage everyone, no matter what your age is, no matter if you 40, 50, 60s, investing is always something that you can do. And I understand that a lot of times the older generation was given the task of going to work, working a 9 to 5, working 20, 30 years, getting a pension. And then, that was life, right? But we live in a time now where you have the ability to invest your money as quickly as just downloading an app on your phone and, clicking a button, right? So technology, information, the accesses have changed. And it's up to us to look at what's happening now and making adjustments, even though sometimes breaking habits and breaking thought process and the way we think, the way we go about living could be a little difficult, but it's much needed for you to do it. And in the world that we live in with inflation and higher prices for everything, it's almost, impossible to be successful without investing your money, right? So if it's entrepreneurship, if it's investing, we talked about the cash flow quadrant months ago when it came to the different quadrants that you can be in and how you can move from one quadrant to another or be in multiple quadrants at one time. We had that discussion on the channel. Tap into the video about the cash flow quadrants. But it's almost imperative at this point for you to invest money so that you can make percentage gains on your dollars and how much money you invest. So I continue to implore you guys, continue to encourage you guys to go out, gain information, get around some people that might know a little bit more than you. Tap into this channel as we continue to talk about all things stocks and all things financial literacy, and learn. Put yourself around people that might know more than you. Start investing today if you can. If you have not already started, start today. Open that brokerage account, get on that app, down, put some money into that account and allow that money to continue to grow over a long period of time, right? So as we get started today, as we have seen, the stock market has pulled back in the month of this month of November. And usually the month of November is the most beneficial month to invest in the stock market on a year. On average, over the last 50 years, the stock market has gone up 2 to 3% in the month of November. But we have seen that not be the case this year, right? A little bit of that has to do with the government shutdown. A little bit of that has to do with AI, some of the uncertainties when it comes to AI trade overseas, as well as AI being overpriced and a possible bubble when it came to tech, as well as artificial intelligence. Um, we've seen some of the earnings reports that came out positive, but also gave some red flags when it came to debt being used to fund some of these projects, while also the capex spending being skyrocketing sky high. So there has been some uncertainty when it comes to the stocks, the AI stocks. We know NVDA pulled back. We know that Meta pulled back, but we've also had some winners when it came to Google. And we're going to talk a little bit more about Google and Alphabet later today on this live. But understand that when we see red, it's opportunities, and it's never ever should be looked at from a negative perspective, right? Sure, you've lost money over the last 30 days. I've lost money over the last 30 days, right? But it should not deter us from continuing to be invested over a long period of time. And I would argue reinvesting and continuing to buy more shares at a discount rather than looking at it from a negative perspective, right? So one of the things that we're going to tap into first today is Bitcoin, because Bitcoin has taken a significant drop. And let's look at Bitcoin right now in the chart, and let's look at Bitcoin's 52-week high was 126,000, right? So we have gone from 126,000 all the way down to it made a low of 80,000, and that was November the 21st, right? So we're talking about a week ago. Bitcoin dropped all the way down to 80,000. So we're talking about if my math is correct, 126. We're talking about a 30% drop. We're talking about a 35% drop in Bitcoin's. Yep, about a 36% drop in Bitcoin's price over the last 30 days, right? So, should you buy into Bitcoin? Should you sell? I would argue that at 80,000, you should have been buying. But let's tap into what Tom Lee has to say when it comes to Bitcoin specifically, and what he is seeing in this market right now for Bitcoin. So understand the charts, right? So let's go back and let's look at the chart for Bitcoin on the year. Um, when it's time for us to consider Should we buy into an asset? We need to look at charts and we need to look at trends, right? Understand that Bitcoin is very volatile. So you as a Bitcoin investor, including me, right, have to be able to emotionally and psychologically understand that Bitcoin is going to have these runs up and also these drops down. 30% in a Bitcoin drop is not abnormal to the asset class. We have seen it happen multiple times, and we have seen it drop even more than 30. We're talking about 40, 50 to 60% in some of the history of Bitcoin. So expecting or not expecting, but looking at a 30% drop in the Bitcoin asset is at all times in the history of the Bitcoin has been a buying opportunity. In every time that Bitcoin has dropped over 30% in price from the history of the asset, it has always been a buying opportunity. So if you like Bitcoin at 100, why wouldn't you like it at 80? If you like Bitcoin at 95, why wouldn't you like it at 80? Right? And if you look at this chart, if you look back in April, which was right here, like Bitcoin came down to close to 70, 75ish. It was the best opportunity to get into the asset this year was around that $75,000 price point. Now, the ability for you to buy at this level means that you have a understanding of an asset and you have a price level that you want to purchase an asset at, and you want to take advantage of those lower prices. That's the best time to get in, right? The second best time to get in for the year was a week ago, which was 80,000. So we have to look at buying all assets, real estate, stocks, crypto, anything that you purchase in. If you can get a significant discount on the asset, the purchase that you buy into that asset means everything to the long-term profits and gains that you ultimately can make long-term. So the question is, are we buying into assets or are we selling right now? I would argue that over the last week, we should have been buying assets. We should have been buying stocks. We should have been buying crypto, buying, Bitcoin specifically, as we have seen these drops down to what it was a week ago, which was 80,000. Bitcoin is currently sitting at 91, right? And as Tom Lee chucks more into this, he'll mention how quickly Bitcoin moves. So you might say, "Oh, I'll just wait for it to come down a little bit more." You might not get the opportunity for it to come down again. Now, sure, if it come down again, we continue to buy, but understand that that $80,000 price level was a significant buying level for buying Bitcoin specifically. So crypto makes moves in a 10-day period, significant moves in a 10-day period. So you have to be ready to go when it comes to buying this asset, specifically um, Bitcoin, and you have to be prepared when the time comes. So when people say, I seen this post online, Facebook a couple of days ago, this investing group, and this guy was like, I'm 100% in cash, and you got a bunch of comments and people saying different things, but in my mind, I'm like, why would you ever be 100% in cash? That's not a thing. You should never be 100% in cash when it comes to your investing, right? You always got to have a long-term portfolio. Now, sure, when the stock market crashes and you see, a 30-40% drop in the stock market, that's one thing. But the stock market in the month of November is only down 5%. And it actually might be lower than that right now, with the market continuing to move slightly upward, right? The stock market did not move down that much as what people think it is. It's just that we're not, as new investors, a lot of the younger investors are not really, they've never seen a crash when it came to the stock market. April was probably the largest crash that we've seen when it comes to new investors. And that wasn't necessarily a crash. The stock market was down 10% or so. So to see this 5% dip in 30 days has been difficult for a lot of investors to be able to stomach, and we've seen a lot of people sell. But you should never be 100% in cash when it comes to your portfolio. I would argue that 10 to 20% is probably a good amount if you're looking to get into stocks at a lower price. But you have to be prepared and ready for these drops and these dips when it comes to Bitcoin, as well as other assets and equities and stocks, right? So the question is, should we be buying or selling? And I will tell you again that you should be buying at these lower prices when it comes to Bitcoin. You should be buying stocks at these lower prices, and we'll get more into NVIDIA and some of these other companies like Meta, things like that. We should definitely be looking to opportunities at lower prices, right? So I was buying Bitcoin over the last week. Definitely took advantage of some of the lower prices. I was able to get into like the 84 range. I wanted to see it bottom and then a move upwards to show that the volume of the 80,000 level, the buying of the hedge funds, the buying at the big banks, was solidified, right? So 80,000 was one of those levels. If it drops lower than 80,000, then we can dip even further down to the low 70s and maybe even to the mid to high 60s. But again, if we see lower prices in Bitcoin, then we'll just continue to buy more, because we are outward thinkers. We are looking long term. This is not a short term trade. We are looking at buying and holding Bitcoin and specific assets over a 10 to 20-year period. So that is Bitcoin specifically. If you are looking at buying Bitcoin right now, Bitcoin is at 91,000, around that 91,000 range. Should you buy it at 91,000? I mean, if you're looking at it long term, why not? I don't see a reason why you shouldn't dollar cost average into Bitcoin as much as you can as at these prices right now, right? So is the AI trade still good to go? That's the next question, because we've talked about AI bubble. We had Michael Berry coming on talking about an AI bubble and a crash pending, and so many people, it led to a lot of fear in the market, a lot of turmoil when it comes to people's confidence, the confidence in the industry as a whole. And it led to a huge drawdown in some of these AI stocks, right? So should you be buying into this market, right? That's the question. Let's take a look at what they're saying about artificial intelligence and the AI trade as a whole on CNBC.
Time stocks are wrapping up a turbulent November. Joining us today, Dan Greenhouse, Chief Strategist at Solus Alternative Asset Management. Dan, happy Friday. Good to see you.
You too, sir.
Sounds like you think the mid-month AI freakout may be behind us.
It looks that way. Listen, again, admittedly, there was a lot of nervousness about the amount of CapEx spending on the part of the large hyperscalers, but I keep coming back to the earnings reports themselves. You have most recently NVIDIA, obviously the biggest and most important of all the names. Their report was quite good. You have all the derivative names underneath that. Christina brought up Vertiv. Their report was quite strong. Amphenol, Eaton, et cetera. Any name even tangentially exposed to this idea was good. So I think you just had a moment where people decided to exercise some selling pressure, if you will. And to me, it was momentary. It's not emblematic of anything longer lasting.
All right. So what do you think dynamics change markedly after year end going into 26?
No, I don't think so. Obviously, we have had a market change here in terms of the Fed rate cut odds. They've gone from 20% to 80% now, mostly related to, obviously, New York Fed President John Williams' comments, and that's given a bit of a lift to the market. So you have the two pillars of the market, the two main pillars of the market right now working in your favor. The AI fundamental story still appears intact to me, and now you have, obviously, the prospect of a rate reduction in December, which is also a positive.
When you judge you said that if you look at the earnings themselves, the AI trade is still intact because the demand is still there and the capital spending is still there. But haven't we moved on to wondering if the payoff will be there, not just all of the capital spending? We know there's fundamentally tons of demand for NVIDIA chips and building data centers. That's what drove the first leg. The second leg, though, is the adoption by enterprise and by consumer and how fast that's coming and how profitable it'll be.
Yeah, that's a perfectly fair worry, as it might have been in the mid-90s with respect to the internet. I would just point to, we all joke about how many companies are mentioning AI on their conference calls, if only to check the box that they mentioned AI on their conference calls. But I read a bunch of conference calls, listened to a bunch where they talked about designing a marketing campaign, or Stephanie Link and I always talk about Facebook's report in terms of increased user interface with the Facebook suite of products related to AI. You're better able to curate your feeds, which keeps you spending more time, which is better for marketing. And that's all around the edges, obviously. But there was also a company that talked about designing a chemical product using proprietary corporate data and AI to design a brand new product. Now, obviously, these are, for lack of a better phrase, few and far between on the margins right now. But I think over time, that's going to just start to come to fruition. Is it enough to justify all the spending that we're doing? Time's going to tell. But I do see evidence that this is starting to have an effect on productivity and product development.
Yeah, well, we're going to have to keep a close eye on that, because isn't it perfectly possible that we're going to have those kinds of moments where we start to question yet again whether all this capital is going to get a decent return?
So what he's saying is, although you have uncertainty and you have concern when it comes to CapEx spending, Meta was the example for the market when it comes to the fact that Mark Zuckerberg spoke about the amount of CapEx spending that Facebook, Meta, is ultimately going to do over the next couple of years. And there were a lot of pain when it comes to that earnings report. Although Meta's fundamentals and earnings and the market beat when it came to the earnings report and forecast were positive, the market did not like the amount of CapEx spending that Meta spoke about, right? So that was one thing. But then you had Oracle and some of their issues, and the market tore that company apart after their earnings report when it came to their AI and ultimately, the debt that they're going to be using for some of the AI fundamental build out. And a lot of the market didn't like that either. So there are multiple things that's happening right now. Palantir stock dropped due to its evaluation, and some believing that is significantly overvalued as it's been running up so much over the last 2 years, year and a half or so. So there's a lot of issues, a lot of fears, a lot of uncertainty for different things. But I believe, and this gentleman is also speaking to the fact that we are too early in the AI phase to where we need to overreact on price currently right now, right? You should look at it from the fundamental standpoint. And this is what I did, is I cut some of the fat. I trimmed the stocks that I don't believe in and I don't want to, put all my faith in, and I trimmed it down from 5 to 3. So now only I have 3 stocks that I love that I want to, invest in long term, and I have my ETFs that I'm ultimately I put money in while the market was coming down, right? So accumulating more shares in great companies into the 3 great companies that I love, and we're going to talk about 2 of those 3 today with Google and NVDA, and tapped into some of the ETFs when it came to some of the drops in the market. So I think that now we have to be stock pickers, and we have to look at stocks, not necessarily to invest in a lot of them, but to also to invest in a very few amazing players that we know, that we have confidence in, that we can have a level of risk management to understand how we should go about investing in our portfolio. Should you have more than 3? Sure, you could have 4 to 5, but I don't believe that you need 10 stocks. I don't believe you need 15 stocks. I don't think that unless you have hundreds and hundreds of thousands of dollars, and obviously the hedge funds have billions, millions and billions of dollars under asset. That's different. But if you are a retail investor that's looking at, 100,000 or so, in my opinion, you should be investing in a select 3 to 5 great companies and then some ETFs for your long-term portfolio, right? So I am not worried about the issues currently and the fears right now. I think that at some point in the future, over the next year or 2, there could be a huge drawdown when it comes to some of these AI plays. But currently, right now, we have seen the CapEx spending be significant, right? When it comes to NVIDIA and some of the GPUs, we're starting to see TPUs come out with Google, and we're seeing the continued build out of AI infrastructure within this country as well as other countries around the world.
I mean, it's, we still don't know. It's mostly all on the come, Dan.
No, of course, it is all on the, and that's perfectly fair, David. But in media, since we're talking, we're starting to see the use of AI not just in script writing, but in on screen, whether it's special effects. There's a TV show, if you want to call it that, on the internet right now. I believe it's exclusively on Twitter. Don't quote me on that. Which is basically done all with AI animation generation. Obviously, a human wrote the story and instructed it, but AI has effectively generated that story. It's getting a bit of buzz right now for a number of reasons, some good, some bad. But the on the come, we are still early in this. Again, ChatGPT was just a few years ago. The release to the public was just a few years ago. I think it's going to take some time. And if we flash back, as I like to do in this particular show, to Books A Million and the early Amazon and Pets.com, et cetera, a lot of those didn't work out, but they did lay the groundwork for what eventually became quite substantial businesses in many respects. And I think that's probably going to be the same this time around.
Kind of takes us back to employment. MIT did this study earlier in the week. We did a story that found that AI can already replace about 12% of the U.S. workforce. That's today. And yeah. I wonder, if the employment picture degrades, can Fed cuts, further cuts do much to do that, to ameliorate an AI displaced workforce?
Yeah, no, obviously the answer is going to be no. I'm for now on the other side of all these labor market doomsaying. Again, just to flash back to the internet, if I told you the internet was going to come along and we were going to completely disintermediate retail and ticket buying and any number of other industries, large and small, you would have said, oh, there's going to be a jobs apocalypse. And in some respects, for some industries, there certainly was. But there's 160 million people working today, obviously considerably larger than was the case in 95, 99, 2003, et cetera. You could make the same argument about ATMs and what that would do to bank tellers. And for a long time, we had more bank tellers than we did. So I read these stories about how AI is going to displace 12% or 25 million jobs or whatever the do. I don't. This is America, and we've always found a way to create new jobs, new productivity, new labor, et cetera, et cetera. And I don't know why this is going to be the exception to the.
Well, this is where I disagree. Right. So the thing that we do on this channel is we talk truth, and we talk. It doesn't matter who's talking or who's discussing it. I'm going to be honest. Although I understand where he's coming from when it comes to today, and what he's seeing in the labor market, I think that there has been too many reports of, if it's automation and robotics, when it comes to Amazon, Tesla. I think that, we have seen reports of Waymo. We have seen reports of Uber. We've seen reports of Tesla when it comes to automated vehicles driving. Um, that's going to obviously impact the job market when it comes to the 1099 contractors that do Uber and Lyft, right? Even if you talk about cutting 10 to 20% of the workforce, that's a lot of people, right? And that's entry level people that's looking for gig work, extra money. If it's, someone that's doing it full time, that don't have a W-2 job, they do those, work on the side. We have seen Amazon talk about robotics when it comes to like the warehousing aspect of things, and how that's taking people's jobs. We've seen the cuts in companies like Microsoft. We've seen in companies like Salesforce. We've seen thousands and thousands of people being cut, basically stating that there is an impact when it comes to artificial intelligence. That may not be the case today. It also may not be the case in 3 to 6 months. But over a longer period of time, there will be significant job losses when it comes to technology, artificial intelligence, and robotics. That's just fact. Like, we can't dispute that. That's just what it's going to be, right? So it's important that we understand what these job losses look like and how that impacts our lives, and then ultimately the lives of the future youth and the future generation that's going to come. Now, will AI bring more jobs? Sure. That's obvious. The same way that the internet brought more jobs. So there could be a positive trade-off when it comes to artificial intelligence and the new jobs, like prompt engineering and things like that, for the future. But to be completely honest, there is going to be a downside to the new technology when it comes to jobs, right? So I understand what he's trying to say short term, but over a longer period of time, I think that it would be irresponsible to say that we're not going to see job losses, and significant job losses when it comes to not just artificial intelligence, but it's automation and robotics alone, right? So that is the AI trade. We do believe, and I do believe, that the AI trade is still intact. I think that we are in the second inning, third inning, and the gentleman usually says is we're in the early stages of the AI build out when it comes to infrastructure. We're going to talk about an opportunity, the biggest opportunities moving forward when it comes to the stock market later in the show. But I do believe that the AI infrastructure build out is continuing, and it is in the early stages of it, right? We've seen reports from Saudi Arabia. We've seen reports over in UAE when it comes to how they are investing into their technology. We know that China is continuing to pour money into their technology to continue to push their country forward. And we know that the United States and the president and the government has continued to push artificial intelligence as well as crypto over, for the country and for the dominance of this nation moving forward, right? So AI infrastructure build out is continuing. We should be continuing to invest in artificial intelligence. I love NVIDIA, as you all know. That's my number one holding in my stock portfolio. And we're going to continue investing in that AI infrastructure play. All right. So are we going to get a year in rally? So normally seasonality matters when it comes to the stock market. This season has been totally opposite of what it usually is. If you know how the market moves, the month of September is usually one of the worst months in worst months to invest in the stock market. October is like this in between month. Usually the first week or two of October is continuing the September trend. But then in the latter half of October, we usually see a run up into November, and then we see the market just go crazy through what they call a Santa Claus rally through the early to mid weeks of the month of December. Right now, we have seen opposite. September was really good. Right? September was really good. October it started off good, but then the government shutdown affected the latter half of the month. And then the month of November has been terrible when it comes to the normal yearly schedule of how seasonality works in the stock market. So will we see the month of December as we end this month and we see a good month in December, or are we going to continue with more volatility? Let's talk about that specifically, and let's see what the analysts are saying for the month of December and a year in rally.
On the horizon, this week's rebound, do we think a year-long rally, year-end rally is coming, Guy?
Gobble, gobble. I had to say that. Happy hump day. Let's get it out of our system now. Okay, it's out. It's amazing. Tim talked about this the other day. The fact that last week I was talking about the potential for an outside month to the downside when the S&P 500 was 6,500-ish. We had made a new all-time high in the month of November. We were flirting with the lows in October. They defended the 100-day moving average, and here we are 250 or so handles higher. As a matter of fact, if something weird happens on Friday, you could have an outside month to the upside if we close on all-time highs. That's not out of the realm of possibility given what we're seeing. You mentioned the VIX getting tame again. It was absolutely showing warning signs a week or so ago. Yields coming down, even Bitcoin getting off the mat, all good things. And I got to tell you something, as we get into December, as bearish as I want to be, it's very hard given the calendar.
When you look at people and funds into year end, the reason why it's historically a positive sign or a positive seasonality for the market is if you're long the market, you want to see your stocks go higher. If you're underperforming the market, you want to average or you want to dress those positions up. So not saying that they're market manipulating, but you're more apt to buy this dip to make your existing positions look better than worse. So how we always talk about the Fed and are they the biggest thing for the market? Well, did this week prove that? I think pretty much people are still worried about the Fed, right? So worried about Powell got a little more hawkish. That sent the market lower. And now we see a little more dovish and the market's higher. I think it's as simple as that.
Yeah, we had Waller on Monday telling another network that he would be inclined to cut rates. We have JP Morgan this afternoon flipping and now seeing a cut in December. Tim, so it does seem the Fed is a force in terms of Fed cut. Great for the markets. We are, clear for that. There's a glide path forward.
There's that glide path, and the Fed's always a force. I mean, the fact that I don't think we're debating it. So let me just say, I thought it started last Friday, and that's what turned the market was the Fed's Williams, New York Fed, arguably the most important Fed. And so you combine that with what was, it's a week, by the way, that forgot NVIDIA. It's the week that NVIDIA forgot. And ultimately, the dynamic here is it's a great show for equities, given that leadership coming from the semiconductors, which did lead, but not by NVIDIA, was there. So JP Morgan, the aforementioned, there they were upgrading their S&P to 7,500 next year, but they said it could actually be closer to 8,000 if we have a more dovish Fed. They qualified it and said we could go even higher. But at the root of they and other houses on Wall Street are the quality of earnings. And that really is, I think, part of the story here. This year-end rally and off of those lows, those intraday lows from last Friday, you've got almost a 10.5% move in semis. You've got a almost 6% move in the NASDAQ. Dare I utter the word small cap in the same sentence? And they rallied almost 8%. And so the question for investors often is during these bouts of volatility, should you be doing anything or you should be buying? And I'll just add one more thing is that retail showed both last Friday and on Monday, and this is actually data I got from JP Morgan, which is that they had one of their highest buying days, up days on Monday, a 94 percentile up buying day on Monday after the kind of fallout from Friday. So I think retail's alive and well, and I think the market's going higher.
So what they're basically saying is we had earnings for NVIDIA. NVIDIA's earnings was a must-see TV, right? Everybody was tapping in, and I was not home that day to be able to go live on that day for earnings for NVIDIA, right? NVIDIA's earnings was great. It was great. Forecast was great. Beat earnings report, the revenue, and that's without any China revenue, right? So NVIDIA's earnings was great. The forecast moving forward, they are sold out of their new GPUs for 2026, which is amazing. They are forecasting, another amazing year, 2026 for their AI infrastructure and GPU chips, right? So NVIDIA stock soared, went up. I believe it got as high as 7-8% after market close on their earnings report date. But we've seen a very, very switch in the stock market sentiment very shortly after NVIDIA's earnings, and the AI trade went down significantly. So NVIDIA has not actually rallied to the level that the S&P has rallied. Looking at this chart, right back through Friday, the S&P was down 6,500 level, and it has gone all the way back up to 6,800 level. And let's see where it is right now, which S&P 500 is at the 68.2 level right now. So NVIDIA is lagging currently right now when it comes to the S&P 500. And the rate cuts, the sentiment for rate cuts in December, which is the rate cut decision, I believe, is December the 9th or December the 10th. We're December the 10th for the Fed. I do believe we're going to get a 25 basis rate cut due to unemployment rate continuing to go up a little bit. As long as we don't get a higher inflation report, CPI report over the next 2 weeks, then I believe that we'll see a 25 basis rate cut, but then I'll see a pause. That there's probably going to be a pause after the Fed decision going into to December and into 2026. So if we get that rate cut, we can see stocks continue to rally to the year end. We see that with quote unquote Santa Claus rally, and you may see stocks hit 7,000. You may see the S&P 500 get up to that 7,000 level. Which is a possibility through the end of this year. Which is really more important is what the end of next year looking like when it comes to JP Morgan. They stated that S&P 500 could reach that 75, if not 8,000 level to end the year of 2026, which is why it's always important to look long term, because the short term price isn't necessarily that important. It's really the long term price and what you need to be looking at and how much you can make if you look at least a year, 2 to 5 years to 10 years ahead, right? So we are in a very good situation to possibly see an end of year rally through the S&P 500, but also led by technology stocks.
And retail has largely been right all year. Micah, what do you see here going forward?
Well, you brought up the VIX at the very beginning. Two things about that. The first is that we've seen multiple times this year that when the VIX has gotten north of 25, that represented maybe a little bit of excess fear, a slightly oversold condition. And it seems like that was reiterated again very recently. The other thing about the VIX I would point out is that just because of the mechanics of how it is calculated, it looks 30 days in advance and is estimating the volatility that the S&P is going to experience over that intervening 30 days. But there would normally be 22 trading days in that session, in that period of time. Now we have slightly less because we've got a half day Friday, we're off tomorrow, and then we have a half day on Christmas Eve and we're off on Christmas. So in that 30-day window, we're actually 3 days shy of the 22 you would normally experience. So the VIX is actually slightly higher and it's on its way down. What does that tell me? I actually think there could be a little bit more room to the upside here because it seems like that oversold condition probably could run, a little bit further from here.
We are on the same page when it comes to the year-end rally for the stock market and the continued appreciation of the stocks as a whole. Now, you need to be mindful of what stocks you are investing in, which is very important. But all in all, the stock market is continuing to get through some fears. It's continuing to work through some uncertainty. I believe I screenshotted the fear and greed index. I believe the fear and greed index got all the way down to I believe like 7 or 9. It is now currently at 23, which is still extreme fear, whenever you see the fear and greed index down in that level of like single digits, it is always a great time to buy into the stocks. Let's see if you can see that. Fear and greed index is currently at 23. So this is also, a nice little tool to have. It's not your end all be all decision maker by any means, but it's also something that you should look at when it comes to the sentiment of the market as a whole. And when, Warren Buffett always says buy when people are fearful and sell when people are greedy. Usually when we see fear, extreme fear specifically, it's usually always good time to start dabbing into your buying more shares of companies and looking at long-term options and leaps moving forward, right? And then at the same time, when you're seeing extreme greed, it's always interesting when you get up to that extreme greed level is usually when the market is hitting an all-time high and when you see assets are continuing to grow. It's never a bad sign to take some profits. I don't use the extreme greed to sell by any means, but it's something that you should take a look at and be mindful of, right? So we are seeing positively when it comes to the end of the year rally. If the Fed does cut rates, we could see, some very, very positive moves when it comes to the stock market. So take a look at that. We got 2 weeks before the Fed meeting. We will be live on that Fed meeting to make sure that we are tapping into the channel as well as going live to see the Fed Reserve Chair Jerome Powell and the press conference. So we're a couple weeks away from that. The stock market is starting to predict or to presume that there will be a rate cut, but we'll see what happens, right? So now what we have seen is Google has taken off, right? I love this because at this moment, I am up over 90% in Google alone. I bought Google when it was a lot lower. I seen that there was a level of uncertainty when it came to Google's Chrome business, that they won the antitrust case. We have seen some issues when it comes to people questioning if ChatGPT and other AI tools are going to hurt Google's search business, which led to some uncertainty and lagging when it comes to Google's share price. We have seen some questions about Google Cloud. There's always all these little issues when it comes to Google, but Google has Gemini is great. We have seen Google's cloud business continuing to do well. We've seen Google search continue to do well. They are jumping into that quantum space. They're probably the only company that has a actual quantum chip that they have tested out and actually show some progress in. Google is amazing. They got partnerships with Apple, and then they mentioned partnerships with Meta just a couple days ago. They're creating their own TPUs now, so they can be less reliant on NVIDIA's GPUs. It has been a master class on what Google is offering from a business perspective, but also to the consumer. So let's take a look at Google and Alphabet and see how Google is starting to really, really become a major player in the AI space and starting to dominate the market as a whole.
Bringing in Evercore ISI, head of internet research, Mark Mahaney, has a buy in Alphabet 325 price target. Been quite a run here, Mark. I guess my first question is, do you keep owning it here? The multiple has moved up a bit.
Yeah, we've had a phenomenal run in the stock. It's doubled over the last 6 months. It kind of reminds me a little bit of the dramatic recovery you had in Meta and Netflix's stocks 3 years ago, except those were stock recoveries off of what were kind of broken fundamentals. That's never been the case with Google. Their fundamentals have been pretty consistent. It's just that the market was so negative on Google 6 months ago because of the DOJ and because of ChatGPT. And I just think the market was way too negative. The stock was oversold at 15 times earnings. Is it overbought here at 29 times? No, but I think that the pitch you make for it's very hard to see a material re-rating in the multiple going materially higher from here. But fundamentals look great for the company. And this big, broad pitch they can make of We've got the leading AI model. We've got the broadest way to monetize that of any company in the world. Oh, yeah. And we've got the lowest cost infrastructure because we're vertically integrated up and down the tech stack. That's a very powerful pitch. And so I think this stock is now a high quality compounder. It can largely hold a multiple, though watch for some negative catalysts coming from ChatGPT in the next 12 months. But it can largely hold the multiple. And the stock can go higher from here. I think there are better candidates from here, more dislocated opportunities. But, you know, all the credit goes to Google, and I think the stock can still compound. I think you can still hold it.
So let's look at this quick chart real quick, and let's look at the year rally for Google. Where is that chart at? There we go. Oh, that's a 2-year. Let's just look at this right here, right? So amazing. Let's just say that Google's chart is absolutely amazing. If you pay attention in 2024, right, we were down here at these levels, and I believe that's probably 140-ish. We had a dip down again. These are always buying opportunities. When you see these dips down, these 10%, 20% dips down. This was April of this year when I bought into Google, and look at this rise up. It's been amazing. If you have been buying shares of Google, if you've been, jumping into, if you have a leap or long-term swing option trades, I mean, you have made so much money. And it's really about, deciding what companies you love and being able to just capture and take advantage of the opportunities when they come. Again, I was on Facebook a couple of days ago, and someone in the investment group stated, is Google a great long-term play? And, should I be buying at these prices, these 315 or so, 320 prices? My answer to you and to anyone that's asking that question is Google a long-term stock to own? Absolutely. Absolutely. We're not just talking about the AI play. We're talking about the possible quantum play. We were talking about the possible quantum play, right? But Google is an amazing company. YouTube alone, as we are on YouTube alone is just an amazing outlet that will continue to grow and transition. It's one of the best outlets that we have now in media, and also in how much revenue it brings in on a quarterly to yearly basis, right? So Google is an amazing company to own, amazing company to hold long term. Should you be buying at 318, 320 levels? No, I do not believe you should be buying at those prices. I think you need to wait for a 10 to 15% pullback in the share price for the stock. So I would be, looking at that 290 to 270, 260 level probably to get back into the company. And I think you should wait for another pullback in the share price, which will probably happen, sometime over the next 3 to 6 months. So you should definitely be buying into Google. You should be owning the stock long term, but do not buy at these 320, price levels. It is ran too high too quickly, and you really want to wait for that 10 to 20% pullback on a 52-week high level. So, maybe around that February, March, April timeframe, 2026 is usually when we see some volatility and seasonalities for the springtime, early springtime. That's usually when stocks tend to pull back a little bit. So, wait, be patient, but be opportunistic when it comes to some of these pullbacks, and be ready to fire when those opportunities come.
The multiple, though watch for some negative catalysts coming from ChatGPT in the next 12 months, but it can largely hold the multiple, and the stock can go higher from here. I think there are better candidates from here, more dislocated opportunities, but all the credit goes to Google, and I think the stock can still compound. I think you can still hold it.
Yeah, I have made the point many times. The narrative has shifted so dramatically around this name, as you point out, in a relatively short amount of time, when it was all about, my God, their monopoly in search is going to go away. And then to your point, of course, the upcoming DOJ at the time, but then the remedy from Judge Mehta was virtually nothing. All right, that's not a question, but this is, which is, you just mentioned ChatGPT. I mean, this race is not over yet. And there is a view in some ways that it might be winner take all. How do you see it?
Oh, it's not winner take all. You're going to have a couple of large winners, and I want to make sure we don't lose. We haven't heard from ChatGPT in a while, but we will. We're going to get that billion DAU announcement or billion WOW announcement, weekly average user announcement. I think that probably comes in the next 2 to 3 months. And then I think it's almost inevitable that ChatGPT, OpenAI are going to launch an ad model next year that they may not call search, but it's going to look like, feel like, smell like search. And it's going to be a paid lead generation model that won't impact Google's revenue anytime soon. But, that will give them a run for the money in the next, call it 2, 3, 4 years. So those, we haven't heard. ChatGPT is still out there. Let's not forget that. And in the meantime, though, I think what's wonderful about Google right here and now are the fundamentals. I think you're going to have accelerating search revenue growth, accelerating YouTube growth. Google Cloud growth is going to stay solidly in the mid-30s. And then Waymo, we've had this dramatic acceleration in Waymo rollouts to different cities, and they by far own the robo-taxi market. Hats off, credit to them. So I just think the fundamental setup on Google is super strong now, and the valuation, largely reflects that. So it's still a buy for me. I'm sorry, it's not just a hold; it's a buy for me because I think it's a high-quality compounder, kind of in a way I thought Meta was. But now I think that the risk-reward between those two stocks probably shifts a little bit.
I agree. And Waymo is something that we haven't talked a lot about when it comes to autonomous driving, because most people just talk about Tesla and they talk about robotics when it comes to Amazon, but we don't talk automation and the fact that Google is a huge player in the space of Waymo and automation when it comes to the cars. This is something that Google been working on for a long time. So there is an opportunity, a huge opportunity for Google to take some type of share of Waymo and possibly do partnerships when it comes to Uber, Lyft. They could just buy Lyft out, honestly, and just, have Waymo as, a spinoff, as well as what YouTube is when it comes to the revenue of Google. So there's so many opportunities, and we're not talking about quantum computing because that's a whole nother set of possibilities in the future. But again, Google is an amazing company. We should be owning it for sure. I would wait for a small pullback in the stock to continue to buy more shares. But again, amazing company, ran up insanely over the last couple weeks to a month. And it is definitely a great opportunity to get into the a great stock moving forward. So I own it. I love it. I'm not buying it at these prices. Only thing that I wish I did more of was buy more options on it. But I got shares. We are up over 90%. Definitely happy with Google, and we are holding that for a long, long time, right? So we have been talking about these AI plays. We talked about some of these companies, NVDA, Google. We've talked about companies that we have talked about in the past when it comes to Amazon. Another great company. Earnings was great. It ran up. It pulled back a little bit. This is definitely a time where you could buy Amazon right now. Meta has pulled back significantly over the last 2 weeks to a month. So Meta is a good opportunity to jump into the stock. If you got it under 600, I said it in a previous video. If Meta hit under 600, I'm buying anything in the fives. I think it got to about 570 at one point over the last couple of weeks. But man, Meta is definitely a buying opportunity right now. So look into Meta if you are interested, right? So my guys, EYL, talked about the biggest new opportunities in the stock market moving forward and how we need to be looking at the AI play and how we should be moving forward when it comes to our investments. Let's take a look at what the great guys at EYL. Again, I am a supporter of Earn Your Leisure. I am a stock. I am in Red Panda with Ian Dunlap's the master investor stock group. Definitely appreciate my guy and appreciate the guys at EYL. I do have my tickets to InvestFest, by the way, next April. It's already paid for. So we're going to be in Atlanta next year, and we're going to continue to pour into the community as well as invest at a high level, buying stocks, buying real estate, all things investing, right? So let's look at what EYL stated on their Market Mondays, YouTube broadcast this past week regarding the biggest opportunities currently in the market as we move forward in AI play.
The next wave of opportunity, as far as I put a video in the group chat the other day.
Yeah.
We'll talk about that.
Sure.
Yeah. So I mean, the video, it was interesting because we had talked about this maybe a month ago when you're like, everybody's talking AI, and they're talking GPUs, and that's great. But none of this works without power. Right. And we've talked about who could lead in this space or where the space is headed. And yeah, long term, we know the solutions, but we don't have a long term idea here, right? This needs to be immediate, especially if, like we said, this is a national security issue. And so you start thinking short term. Who could be the short term people who can actually benefit from it? We've seen Caterpillar when we were talking about gas turbines, and it was like, yeah. So there's a near term solution in terms of natural gas turbines. The company that I've been studying, and I think has a great lead in it, and you guys can let me know what you think, is going to be GE Vernova. So GE, right? This is another one of these companies that was part of GE, split off, and now has become its own company. And the reason is because of those gas turbines. Right now, or 2024, we'll see what the 2025 numbers are. They captured 34% of the global gas turbine market. 34% last year. That number is going to increase as we see more AI data centers put online, right? We don't have nuclear reactors to fulfill the power that's needed. We don't have solar. We don't have it yet. What we do have is gas turbines, and they're doing that. Why did I like it though? Right? Outside of that market share that they're dominating in, and I'll give you a power, that's almost 106 megawatts, right? Or over 20,000 megawatts in orders for 2025. Who are their partners? Amazon, AWS. Who else on the U.S. grid? Duke Energy. Who else in renewable energy? Next Era Energy. Who else in developing engine? Chevron. You might have heard of them, right? This is the real reason, though. Not only is this a domestic thing, if you look at their international partnerships, you start to see a picture that's being painted, right? These data centers are not just going to be in America, although we would like them to be. They're being built all over, right? The number one thing that I loved was I saw that the GE Saudi Advanced Turbines, they've partnered with them.
So real quick, what if you don't know, they are speaking about AI infrastructure and data center infrastructure and how the United States, as well as other countries around the world, need energy, electricity, nuclear power, different types of energy to be able to power data centers, as well as power artificial intelligence and the whole build out of AI, right? So we talked about some of these companies in the past. He's talking about GE Vernova, Duke Energy. He's going to mention Vistra at some point. But GE Vernova is GEV, stock ticker is GEV, if you're interested in taking a look at it. It's important for us to understand why these things are so important when it comes to the AI build out. It's okay to have, GPUs when it comes to NVIDIA and TPUs and Google and so many of these other AI chips and semiconductors and things like that. But all of these AI models, all of these LMNs, all of these data centers that's being built in the United States, you got Micron building a fab in New York. You have, some of these companies building stuff in Texas and Arizona and some of these other, places, TSM, as well as, the OpenAI SoftBank deal. You have Microsoft and some of the deals in Google and things like that. All of these centers, all of these electricity things need energy. They need electricity. So the opportunities that they're speaking about is the companies that will then provide the energy, provide the electricity, provide the power, the nuclear power, the fuel cells, as some of the things that people were talking about natural gas and natural energy when it comes to fuel cells and things like that. You have to do your research and understand partnerships, understand who's doing deals with who, and who is the players that's going to be impactful the most over the next 5 to 10 years, because then that then drives revenue, that then drives profits, and ultimately makes you money when it comes to the stock and the stock price asset appreciation. So they are giving you opportunities in the market right now to look at companies that are going to help build out energy AI infrastructure play. And again, we talked about this, a month ago or so about what companies you should be looking at when it comes to AI energy and AI infrastructure. All right. So they're talking about, these companies, and I believe that they are absolutely true and absolutely beneficial for you to look at some of these players now, as we are starting to see the AI build out for these fabs, for these facilities, for these data centers that's going to then power artificial intelligence and be able to power technology over the next decade and moving into, the 20-year outlook in the energy and AI play.
So why does that make sense to me? Well, in May, we watched a conglomerate of our most brilliant minds in the world of business and AI go to Saudi.
Yep.
Why did they go? They went to go announce infrastructure in AI.
Mm-hmm.
They're starting to build that infrastructure. They also don't have the time. So if I start seeing American companies partnering with Saudi companies to provide energy, that tells me there's something there and something you can build on. Mm-hmm. Now, GEV is a big boy heavyweight. If you're in EYL, you know what that means, right? These are companies that have large options contracts. And so we looked inside the ETFs that have them, and we put a few out there. FPX is one of those that actually has pulled back a little bit. But energy is going to be a story, and I think GEV is going to be the one that is going to be leading that story here in the very near future, but definitely long-term as well.
And I want to say once again, all energy companies are not created equal. I'm seeing it in this space too. There's a lot of startup or new IPO energy companies that are trying to position themselves. I want to be very clear. That's a winner. Nextera has been one of my favorites. It's been in Stock Club forever. But can we round out what you think the big four would be in terms of energy so people don't invest in maybe the 13th best energy company? Duke is a legacy company. I think that's going to benefit as well.
This is one that we actually covered in our last mastermind, and somebody actually put in the chat, maybe it was there. I had Vistra Energy is there as well.
Yep.
Vistra is one of my favorites.
That's a great four.
I think Constellation will have a say in this as well. Obviously, when we start talking about their partnerships with Microsoft, I think Constellation plays a role in this. GEV plays a role. I knew it. This is a very smart audience. I knew somebody was going to put OKLO. Yes, they had a nice pullback. If I'm picking my four, I would probably pick those four, and then I would have as an asterisk, I would put OKLO just because.
Yeah,
as a fifth, just because I understand the story, I understand nuclear and how that's going to be powering us at a more efficient level. Short term, though, what's going to be the solution? And so that's why I think GEV is going to be the leader here. Mm-hmm. But yeah, that's a solid four. And again, if you can't decide on, hey, this one's a little bit too much, I've said it before. XLU Spider's energy ETF is just a solid place. And if you want to go look at some of those companies, go look at the top 2 or 3 or 4 in there. We've probably said them already, but look at the top 2 or 3 and 4 in there, because again, if we're looking at the body, right? If this is a body, you need fuel.
So I am 1,000% in agreement. We talked about this. We've talked about this. We talked about this. AI infrastructure. It's how you need to be looking at the future of your investments and how you can tap into some new investments. Everyone's looking at what's new, what's the new thing, what's the new thing, what's the new thing. This is definitely something that you can tap into when it comes to your portfolio. Look at some of these companies. They named GE Vernova, which is GEV, right? GEV. They talked about Duke Energy. All right, Duke Energy. Duke Energy is DUK. All right, they talked about Vistra, which is one of my babies, VST. I will put another one in there in VRT also. Definitely invested into VST and VRT when it comes to, data center cooling. That's Vertiv. And then they talked about an outlier, or not an outlier, but a Constellation Energy is also one. It's a big company. Take advantage of that. And then Oklo, which is nuclear. And if you look at Oklo's chart, man, that stock ran up to $193 a share. It has come all the way down to 92. It is currently at 92. So it has had a $100 dip in the share price, and it actually fell all the way down to 79 just about a week or two ago. So Oklo is an opportunity to jump into some long term. I'm actually going to look at in the long term option going out about a year or two to see if I can take advantage of a AI energy infrastructure play. And we're going to be buying some of these stocks as we continue to see AI infrastructure being so important to market as a whole, and we start to have the conversation in not just our government but also into other governments across the world, which then makes the AI infrastructure play a very, very big, important tool, right? So at some point in the future, we're going to see the government as well as, the private sector really, really pour money into electricity, infrastructure, data centers, as we are already seeing nuclear energy, fuel cell energy, clean energy solutions. You might see some wind turbines when it comes to wind energy. And it's just going to be a lot of how do we power these data centers? How do we power these facilities? And that's going to be an amazing, amazing investment opportunity. So if you are someone that's looking to jump into something different, so something new, if you've already invested into some of these AI plays and some of these semiconductors and things like that, take a look at the AI infrastructure play. Take a look at the energy. I missed one. NEE, which is Nextera, I believe, which is the ticker NEE. Yep, Nextera Energy. That's also something. Actually, Nextera actually gives you a pretty good dividend too. So take a look at some of these new opportunities. We've talked about it over the last couple months. Take advantage of these pullbacks that we've seen in the stock market as a whole. And I'm gonna leave y'all with this, man. Continue to read, continue to grow with your knowledge, your understanding. Take these dips and take these volatile times as an opportunity to buy more. Gentleman texted me about 2 days ago asking me if Bitcoins drop or these stocks drops is a buying opportunity. I said buy. I don't want to sound like Jim Cramer, but buy, and I say buy, and I say buy. I trim some of the fat. Take a look at what your core holdings is going to be long term. Choose, again, I always say 3 to 5 great companies, 1 or 2 ETFs should be enough for you. Continue to pour into your stock market portfolio. Continue to learn the information. Continue to tap in with the channel with me, man. This is Antoine Small's Financial Blueprint. It's Friday. If y'all got paid today, y'all already know. Take that 10 to 20% of that income, pour it into the stock market. Do not blow all your money on unnecessary stuff, man. This time that we have right now is all about efficiency, lowering your debt, keeping your money moving in a positive direction. Invest, and continue to pour into your journey and your future financial success, man. I love you guys. I appreciate y'all. Again, tap in with the channel, subscribe to the channel, hit the like button. We're going to have some shorts popping. We're going to have some videos popping. Man, I love you guys. I appreciate y'all. I'm out. Antoine Smalls. I'll talk to y'all. Have a good weekend. Peace.